right, we got to talk about some things. We got to talk about NVIDIA. All right. Okay. So listen, this is all over everybody's feed. It's all anybody's talking about, right? This is the monthly, but let's just go look at the daily so you guys can see how absolutely insane this is. All right. So obviously NVIDIA gapped up about 11%. All right. Earnings obviously came out yesterday after market close. And guys, their earnings report is the most unprecedented earnings report in the history of earnings reports. Like, I don't know how I can possibly express how absolutely bananas NVIDIA's performances. Okay, they increased their I'm going to summarize a lot of stuff. We're not going to get super deep into this. There are a bajillion videos out there of all the other finfluencers, you know, talking about this stuff. But at the end of the day, they were able to like basically sextuple their revenue for a 25% increase in their operating expenses. Absolutely insane. And here's the thing. All of their revenue is up. Obviously, what is the highest, what is the biggest reason for everything being up? It's their data center costs, right? They own a lot of data centers. And of course, every company is tripping over themselves to get into this AI boom before it leaves every company behind. And of course, Microsoft extremely well positioned for that with its acquisition, ownership in ChatGPT, and of course the data centers, and NVIDIA doing extremely well in there as well. But I want to talk about this because I want to zoom this. Actually, let's get the weekly up. This is the weekly chart of NVIDIA. And what I want to do, and again, this is blind, so I'm not sure how fantastic this is going to go. But okay, here we go. And what I would like to do here is pin to new right scale. All right. So I have now overlaid the price of Bitcoin with the share price of NVIDIA Corp. And I think you guys can see a very clear correlation here. All right. A very clear correlation here. All right. Obviously, that kind of makes intuitive sense. All right. Obviously, that makes a lot of intuitive sense. And let's place everything into its proper place. All right. So obviously, we talked about the sell the news event. Listen, guys, I mean, I'm not here to toot my own horn or anything. I'm just trying to look back on how we've kind of planned things. So because it's not just me, I've got a great team behind me that gives me advice and analysis and charts that I could never possibly do on my own. And again, quants do a lot of the work too. I got a lot of bots running in the background. So again, but all right, we did expect that Bitcoin was going to sell off following the ETF decision, right? I was actually thinking that the ETFs would be denied, and I was kind of played extremely bearish into that. Those bets didn't necessarily play off the way I wanted them to, but again, was able to profit off the short. Moving on. And then we did expect that Bitcoin was going to rally up to 52.53 based on the Chinese New Year cycle. It always happens every single year. We pump around the same time on an average of 10 to 20%. That panned out. And then we talked about the rejection from 52, 53, which so far kind of has happened. We, of course, haven't broke down, haven't gotten this violent rejection. We're not in the pre-halving dump yet. None of that is confirmed. Okay. But all right. We can clearly see here, the massive correlation during the 2020-2021 bull market. All right. Of course, NVIDIA benefited from the cryptocurrency bull market, the big mining boom. Their graphics cards were high in demand, especially the 3060 Ti. Again, like we were guapping them up back in the day. And everybody I knew that was Ethereum mining was guapping up those 3060s. But since the AI boom has kind of taken off, we can see that NVIDIA has outperformed Bitcoin. All right. Interestingly, NVIDIA has outperformed Bitcoin. All right. And I think that one of the reasons why Bitcoin has kind of been stagnating here is, believe it or not, NVIDIA, right? Because we've had this NVIDIA earnings call. It's the most highly anticipated earnings call I could possibly remember. But that earnings call has come out extremely positive, and now that catalyst is kind of out of the way. And I think that Bitcoin can now finally move out of this consolidation zone and begin trading higher. We, of course, have a lot of things going on today. We have a lot of catalysts, all right? Not necessarily today, but very much coming up, like BlackRock's Digital Asset Summit starts today. So a lot of Web3 individuals there. I mean, the topics are BlackRock's summit, like topics are like current state of the digital asset industry, et cetera, et cetera. So now there obviously have been multiple attempts to push Bitcoin's price down, all right, over the last 5, 6, 7 days, but unsuccessful, right? So we do have very strong support between 48,500 and 50,000. All right. I think that 48,500 is the most critical short-term support that is just absolutely insane. So I think we're all good there. Of course, I talked very clearly about the 50,100 level. We'll take a closer look at that because we have run on liquidations, and obviously the liquidity profile is going to change every single day. And so we need to be aware of what those critical levels are that price cannot close below before we start looking at a trend shift. And we're going to get those. We're going to get those from direct level 2 data from the exchange when we update our liquidation levels here in a little bit. But we got a lot of other upside catalysts too that I think people are forgetting about. Right. First off, there's still this ongoing Bitcoin ETF mania and craze, their marketing push, but also just this massive demand for spot Bitcoin, which is higher than the amount that is being mined every single day, which is creating this kind of supply squeeze, which ideally will push prices to the upside. We've got the Ethereum Denkin upgrade coming up very soon in the middle of March. Obviously, the first trial run was pretty decent. We've got the Bitcoin halving on April 19th to April 20th around there. We've got the ETF approvals for Ethereum coming out in May. We've got rate cuts coming in June. And of course, we have the presidential election happening in November, right? Typically, cryptocurrency rallies in election years. All right. So a lot of bullish catalysts coming up. I don't think there's any real reason to be long-term bearish here. All right. Of course, we do have the kind of the threat, the fear, the danger, the PTSD, if you will, of the pre-halving dump, which, has typically occurred every single bull market cycle. We have the pre-halving rally, and then we dump kind of into mid to late March with a, kind of a capitulation event, highlighting the end of March and kind of being the last opportunity to buy into Bitcoin on that big red candle. But again, history doesn't have to repeat. History doesn't even have to rhyme. All right. We do have a new market structure. We do have a new market cycle, and every moment in the market is unique. And that's wisdom that is this played out quite well. So we never want to, we want to be willing to question our thoughts. We want to be willing to question like everything that we're thinking of. Also, big bullish catalyst coming out. I think this is huge. But we've got the EIP 4844 Ethereum upgrade it's obviously not scheduled yet, but it's coming up pretty soon. And that is going to slash transaction fees on all layer 2s, right? I mean, we're talking right now, transaction fees on Starknet are like an average of like $1. Those could slash down to 10 cents. Gas fees on Optimism are about 38 cents to 20 cents per transaction. Those are going to come down to about 4 cents. Arbitrum is about a quarter to do a transaction. That's going to come down to a couple of pennies. Polygon's zero knowledge EVM could come down to 2 cents. ZK Sync Lite could come down to 2 cents. And this is all going to bolster and create a macro environment where there is going to be increased trading activity, increased altcoin speculation. We already talked about Glassnode's latest report showing those early signs of alt season. The Glassnode alt season indicator has refired, right? Fired began, I believe, in October into January, and then kind of switched off and then fired again February 4th. So we are back technically, quote unquote, in alt season. And we're seeing the liquidity provision on Uniswap for altcoins begin to move farther out. What that means is that if you're a market maker on a centralized exchange, or you're a liquidity provider on a decentralized exchange, which is the same job done in a different way, you provide liquidity within a range. All right. Let me to highlight exactly what we're talking about. I want to make sure you guys understand. Let's get the whiteboard out. If you're a liquidity provider, all right, this is price. Okay, let's say this is price. You need to if you want to make money as a market maker, or if you want to make money as an LP, then you've got to fill orders, right? And you don't want to be like, setting your orders up here, because it's very unlikely the price is going to reach those areas. So you want to be providing liquidity in a relatively tight range around price. All right. On average, you'll see this. The standard is plus 2%, minus 2%. All right. If this is price, then we want to be, then let's say this is, 2%. This is the range where you're going to be setting all your asks, right? Okay. Your limit sells. And if this is negative 2%, this is typically where you're going to concentrate your bid volume. All right. And you're just servicing volatility. You're just servicing traders as price bounces between these ranges. All right. And every once in a while, you'll have a price movement that is greater than, 1 or 2 standard deviations away from price. And that's when we get these kind of liquidation runs, right? These stop loss hunts as price makes this kind of big movement outside of the established range. And you as the market maker are making money as your orders are getting filled within this range. Keep in mind that most market makers are also going to directionally trade. So of course, they're going to trade breakouts. They're going to trade breakdowns as well, because the incentive is on them to make money. Okay, so, but and that's all well and good, but let's talk about another example. So let's talk about incentive. So again, if we see, because we can see where that liquidity is being concentrated. All right, if we see that liquidity is only being concentrated within 1 to 2% of price, all right, 2%, 2%. All right, and we're not seeing a lot of liquidity above that range or below that range, then we know that the market makers and the LPs, if we're talking about a DEX, they're not really anticipating a big move because they're not preparing for it, right? Market makers and LPs are not stupid. They're the most intelligent market participants. They know when the market's going to move, or they at least have a good feeling, and they'll begin padding liquidity out in anticipation of that. So when we start to see that liquidity, the bids and the asks begin to be fleshed out outside greater than 2% of the range of current price, then that is an indication that the market makers are preparing for a large movement, and liquidity providers are no different on decentralized exchanges. And what we are starting to see is we are starting to see liquidity being provided on decentralized exchanges outside on centralized exchanges. The range is 2%. On DEXs, it's typically 5%. And we're starting to see that begin to pad out. This is an early sign that liquidity providers on Uniswap are preparing for increased volatility in the altcoin season. And what that means is price increases. That means big moves. That means big moves. All right. Daniel Master, thanks for the sub, man. Welcome to the community, guys. Don't forget to smash that like button while you're down there. It's right next to the subscribe button. You can't miss it. So yeah. So all season's coming. Bitcoin's probably going to move up. Bitcoin is overbought, and Bitcoin, the last 13 out of 14 times that we've been above 80% on the RSI, we have rallied, not corrected. All right. Yeah. So just getting back here, let's start off. Just going to zoom out here. Big game plan here on the weekly time frame. What we're talking about, big reversal from 52.53, or if we close above 53, probably 52.500 now at this point in time. I think we're going to blast right up to 57. And I am assigning a much higher probability to price moving up. What do we got to move up? What, 10%? Yeah, I'm assigning a significantly higher probability that price is going to move up 10% than we correct 10%. So I'm quite bullish, guys. I'm quite bullish. Life's good. Daily time frame, again, RSI, where are we? Daily time frame is not, daily RSI is not above 80. TSI is still confirming the bullish trade. What do we got here? This is the most important thing, guys. This is what we watch for. This is what we wait for. We've got daily volatility getting crushed, and you know what that means. If Tyler's in the chat, he knows what that means. He will tell you guys all about it. He will not stop talking about what it means until he is blue in the face. What it means is volatility is now crushed. And what happens after volatility gets crushed? Expansion. We get a big move. All right. So this is pretty simple. If you're just looking at this as an independent trader, you don't have a strategy, you're not feeling bullish like I am, you just wanted to completely ignore everything I just said for the last few minutes, totally fine. But what you cannot ignore is just I guess you can't ignore it, but just go back test volatility expansions. All right. Let's go look at the last time. All right. This is nice and clear. Let's go look at the last time. Can we just hide drawings for a second? Thank you very much. Let's go look at the last time that volatility got crushed and price action looked very similar. All right. What do we got? This move up, sideways price action for like a week. What happened? All right. So, you do not have to have a directional bias going into volatility crush. You don't. The strategy is quite simple. You wait for IV crush, and then you wait for a movement, a decisive movement in any direction, and then you trade in that direction. All right. And you have a high probability to be accurate, to be correct with that trade, to be correct with that position. So what that means, price moving sideways in consolidation, could be distribution, could be reaccumulation. I don't know. Nobody does. It just depends on which way the market breaks and which way order flow comes in. But we do know that we are now primed for a situation for if price now does move in a direction, that it's probably going to continue moving in that direction for quite a while. And given the fact that we had a nice run up into this range, we will probably get a nice continuation or reversal moving out of this range. So just sit on your hands. If you're bearish, be bearish, right? Wait for the breakdown, short the breakdown. If you're bullish, be bullish, right? Wait for the breakout, long the breakout. Life's simple. Life's good. Okay.